Yes, family, what's going on, guys? What is up? What is up? What is up? Make some noise in the chat, family, by dropping your locations in. If you are in the building with me tonight, if you guys are live with your boy, if you guys are excited about the sauce and the value that you guys are about to get tonight, family, let me know by dropping those locations. I really like to see how diverse, this community really is. So it's amazing to see so many people, guys, from literally everywhere across this world, tuning into this session, because every single one of you guys that are on right now, we're all very alike. We all coming here because we ultimately want to get better. Okay, we want to improve. We want to become the best version of ourselves so that we can ultimately really learn this amazing skill set that we have access to. All right, so that's definitely something, guys, that I'm excited about. I know that's also something that you guys are excited about. It's just to really see the growth that we are about to have overall, right? So let me go ahead and see who we got in the building today. I see we got Colorado in the house. What's going on? Shout out to you guys out there in Colorado. We got Alabama in the building, Louisiana checking in. We got Vegas. We got Puerto Rico in the house. What is going on? New York City in the building, Baltimore, Maryland. Shout out to you guys out there, Baltimore. I see y'all. We got Dallas in the building, Brooklyn in the building, New Jersey. What is up? What is up? We got Brother O from Philly. What's going on, O? How are you doing? We got Malaysia in the house as well, family. Continue to drop those locations as you guys are tuning in. We got Suriname in the building, right? Massive shout out to all my Noti Gang members in the building. Massive shout outs. Even more of a bigger shout out to every single one of you guys that are also a part of my membership, the Wealthy Fam. I appreciate you guys. Every single one of y'all that have a different color name. I know on the screen, right, everybody has different name, different colors on your name, but on the actual chat, okay, there's a bunch of you guys that actually have a green name attached to you, right? And you also have a beautiful badge, which pretty much shows that you're a part of the membership, but it also shows you how long you've been a part of the membership. Now, I'm very interested to see how many of you guys are actually going to go from this bronze badge, which every single one of you guys should have, right? And how many of you guys are actually going to eventually get to the point where you could be at a diamond badge, right? In order for you to get to that diamond badge, which is really gonna, like, that's impressive, right? But I'm pretty sure some of you guys are gonna get there. In order for you to actually get there, you have to be a part of the membership for literally an entire year, right? So that's gonna be absolutely massive to see how many of you guys actually end up getting that diamond badge. And guess what? For anybody that does stay long enough in the membership, and if you are able to get to the diamond badge, I will have something special waiting for you guys, for anybody that does get to that point, right? But massive shout out to every single one of you guys for tuning in today. Super excited for you guys because we have a lot of information to really talk about. Tomorrow is going to be a very important day overall, with obviously CPI getting released, right? The consumer price index. The consumer price index, guys, is what measures inflation. We've been talking about this pretty consistently now, right, on how important it is for us to be aware from a fundamental standpoint on what's actually happening in this world. And the one big factor that pretty much every single economy is getting destroyed by, and every single central bank is trying to really figure out how to manage, is inflation. It is inflation. Okay, inflation is very big. Inflation is the one thing, guys, that's absolutely going crazy. So us as Forex traders, we really have to understand how news is going to affect the currencies, guys, because the price of these currencies, or the value of these currencies, or the strength and the weakness of these currencies is dictated by fundamental and sentimental analysis. So that's why we're here tonight, to really go ahead and take at least get a somewhat of a good understanding from a fundamental standpoint, but then also look at the markets and see what we can come up with going into tomorrow so that we are prepared as well. Now, what we have for tomorrow, we have the employment change and the unemployment rate for the Canadian dollar getting released tomorrow. So anybody that's trading Canadian pairs, you have to be mindful of that. That is a tier 1 data release, right? That's a big boy. But then the most important one is going to be that CPI and core CPI. Now, as of right now, guys, it's not looking good for CPI. I truly believe that inflation is going to come out, high once again, above 8% once again. So if inflation does come out higher again at around 8% or higher, we have to know how to react to these things. Now, I want to ask you guys, right? I want to ask the entire community. I want to ask my family in the building, right? If CPI comes out higher tomorrow, right? If it comes out at 8% and up, what will that do to the actual currency itself? Right, let me know in the chats, family. Right, let me know in the chats. Right, if inflation does come out higher, then what could we potentially expect the currency to do? All right, and then we're gonna get into the next question after that one, right? But I want to see a lot of answers, guys. Right, I'm very big on participation. Right, I'm very, very big on you guys actually attempting to answer these things, right? Because that means that you guys are actually paying attention. And yeah, I'm here to really analyze the markets and give us potential ideas, but I'm really here to educate, right? That's the one thing that I truly inspire to do. That's the one thing that I truly love to do, is to actually educate. Because with education, everything else is going to really come into the forefront. Right, let's see what else we got in the building. We got Malaysia in the house. We got Suriname in the building. We got Jackson, Mississippi. Shout out to my brother Jarrell. I see you. Right, we got the Chi-Town in the house. Chicago, what's up? Right, we got Florida Noti Gang member in the building. What is going on, Tyree? We got Chicago checking in, minus 10 plus people at my crib watching you in the big screen. What's going on, Christian? I appreciate you and that Chicago squad out there. Got so much love and respect for every single one of you. I'm going to have to take a trip out there, right, and really show you guys a lot of love, because you guys always show me massive love as well. Right, so yeah, guys, right, if inflation numbers still come out high, then that is going to still cause a lot of fear, uncertainty, and doubt in the markets. Okay, that word FUD, F-U-D, FUD, stands for fear, uncertainty, and doubt. Right, if you ever watch a lot of these news channels or a lot of these YouTube channels, guys, that talk about, you know, things from more of an economical standpoint, you're going to hear that word FUD a lot. That pretty much just stands for fear, uncertainty, and doubt. So high inflationary numbers is going to cause FUD in the markets. Okay, it's going to cause FUD in the markets. Right now, for all of my players on the call, right, all of my OGs, all of my that have been paying attention for the past few weeks, during times of FUD, fear, uncertainty, and doubt, what type of sentiment are we going to be expecting in the markets? Is a good one. Right, Jorge already answered it. Shout out to you, Jorge. Right, you answered it before I was even able to ask the question. Right, because yeah, the first question, yeah, the currency should increase in value. The dollar index should go up. The second question is what type of sentiment should we experience? Yep, risk off sentiment. Right now, why should we be experiencing risk off sentiment? It's kind of crazy, right? It's kind of crazy how many of you guys are already understanding this stuff, right? And I'm pretty sure if you guys actually looked at the market, shout out to our newest subscriber. I see you. Appreciate you for actually subscribing to the family. Right, I couldn't actually see the tag because it was actually behind the actual chat. But shout out to you. I appreciate you for actually subscribing. Welcome to the family. Everybody drop some welcomes in the chat for our newest subscriber, our newest family member. All right, so we got Columbia, South Carolina in the building as well. We got Quebec, Canada in the house. We got Sam in the building. What's going on, Sam, out there in Las Vegas? Right, but yeah, guys, we have why should we expect risk-off sentiment in the markets? Why? Because during times of fear and uncertainty and doubt, investors, institutions, right, the people that are actually making the moves, right, the market makers that are actually moving price, during times of chaos and uncertainty, instead of them being with more riskier assets like the stock market or crypto or anything like that, they're going to try to protect themselves, right? They're going to try to protect their actual assets or protect, right, what they actually have. And a way that they actually go from offense to defense, and this is something I want to talk about now that I just came up right now, right? During times of FUD, fear, uncertainty, and doubt, all the big players go from offense, they go to defense. Oh yeah, right? I know we got a lot of athletes in the building tonight, right? If you're an athlete, you guys know what I'm talking about. Going from offense to defense, right? When you're on offense, you're on attack mode, right? You're ready to score. You're ready to do what you got to do. You're a little bit more riskier when you on offense. But when you on defense, you on protect mode, right? You got to guard yourself. You got to guard your assets, right? So risk off is you pretty much playing defense. Risk on is you actually being on offense. right? So again, since we do have inflation coming out, we're probably going to have to play defense. A lot of the big institutions, the big investors, they're going to be looking to continue to play defense so that they can go ahead and protect themselves during all this chaos and uncertainty in the markets. And a way for them to actually protect themselves is by going to more of a safe haven type of play, right? Converting whatever they currently hold right now that's more risky, considered risky, they're going to convert that into cash. Because cash, yeah, although it doesn't, you can't really make money off of you just sitting on cash, at least you won't lose money neither. I hope this makes sense. Right, actually on my Facebook yesterday, I actually asked the question, right? I said, is cash king or is cash trash? I want you guys to answer that question tonight. What do you guys think, family? Is cash king or is cash trash? Let me know in the chats. Right, and if you guys are getting some type of value, go ahead and smash that like button as well. Let's go ahead and smash the like. Right, let's get equal amount of likes for amount of viewers on the call. It's just going to help out tremendously. Right, help out tremendously with really putting this real actual, like this is real value. Right, this is real value right here, right? This is not just talking about, oh, how to do a trend line, which again, all that stuff is important. Technical analysis is important, right? Because you got to know when to enter, when to get out, and all that good stuff. But this is that real sauce, guys. If you've been struggling with trading, although you feel your technical analysis is up to par, then it's probably because you're missing this part of the entire equation. Right, so now the question that I asked, is cash king or is cash trash? Well, my answer to that, I see a lot of you guys saying cash is king. Right, my answer to that is that it really depends on the situation that we're in. It really depends on the state of the economy. Right, because my quote is cash is trash unless there's about to be a market crash. Right, we got Big Bert in the building. What's going on, Bert? Shout out to you in the building. I appreciate you, my brother, for tuning in once again. Much love coming from me to you. Right, write that quote down, guys, right? Cash is trash unless there's about to be a market crash. Because when you're just sitting on cash, you're not able to grow that. You're not making money from that. The bank is literally going to be paying you 0.01% for you to sit on cash. That makes no sense. Right, so cash is trash unless there's about to be a market crash. Do you guys agree with me that there's about to be a market crash, or that the market has already been crashing? Right, stock market has been down for the past few weeks. You guys agree with me or no? Right, we've been experiencing the market already starting to crash and tumble. And when I say market, I'm talking about the equity markets, right? The stock market. And the big reason why we talk about the equity markets and the stock market and the indice market is because the S&P 500 mainly, like that's utilized as a gauge to really determine overall economical health, at least for here in the US. So when the stock market or when the S&P 500 is going up, that usually means that our economy is doing really good. But when the S&P is going backwards and it's starting to actually decrease, see, now that is saying that, man, maybe the markets aren't doing too good. Maybe the economy isn't doing too well. Right? And we can look at the data, in which we will. It's been going backwards. Right? Economy been going down. Right? Because the stock market as well has been going down. Right? I actually read an article, guys, that, I mean, net worth, I believe, I don't know the exact thing, right? But the net worth of average people or households, I forgot what exactly it was, right? But the net worth of the everyday person has decreased by almost multiple billions and billions of dollars over the past few weeks. This is sauce. Right? So, because we see that the potential market is about to crash, because we are experiencing a decline in GDP, and if we do actually come out next month, right? Next month is going to be the end, or at least this month is going to be the end for quarter two. So in July, if GDP numbers also come out negative, then we are going to be quote unquote in an official recession. And once we get into a recession, then yeah, it's going to really lead to a lot of more hell in the markets, guys. So again, cash is trash. You guys know, as an investor, I never recommend to just sit on cash. It doesn't make sense because it's not growing. Your money needs to be in circulation, right? Why do you think money is, another word for money is currency? It's because it needs to be circulating like a current is constantly circulating. When money is circulating, it's going to do wonders for you, and it's going to bring you back more money. Currency, circulation, similar things, right? So your money has to be working for you if you really want to grow. But during times of FUD, fear, uncertainty, and doubt, this is when we have to take our foot off the gas. This is when we have to go ahead and say, man, let me go ahead and get on defense. Instead of me being on offense all this time, right? Instead of me trying to continue to make my money work for me in all these riskier plays, because now we understand that money is going to be more scarce, it's time for us to take a, it's time for us to go on defense and protect ourselves. Right? It's time for us to go on defense, guys. That's what we have to do, or at least that's what we have to think about when we're thinking about sentiment in this market. Right? Overall, the state of the world, the state of the market, we got the boy Skaggs in the building. Shout out to the Pro Profit Society, guys. We do got massive news coming out for you guys with our newest project that we're actually launching. Me, Skaggs, and a few other traders. My boy Kyle, the big homie Ray. Right? We're actually going to be launching something very interesting for all of you guys that I'm pretty sure a lot of y'all is going to love. Right? But we're gonna come out at a time where we really give that big announcement for y'all, right? But right now it's all about defense, guys, because when we're talking about sentiment in the markets, the big boys are playing defense. They're on the defensive. So they're trying to protect. Another thing, right? Interest rates going up, which is what we've been seeing because of inflation. Interest rates going up is a way that the Federal Reserve can actually go ahead and fight inflation. Because when interest rates go up, it is going to be much harder for you to get approved for loans. The cost of borrowing is also going to be a lot more. So more so than not, when the cost of everything goes up, when the cost of borrowing goes up, when also inflation goes up, that also in the market terms, it shows that there's going to be a lot less savings available. So that means interest rates going up can also cause a lot of money tightening across the board. When the supply of something starts to decrease, but the demand is the same, basic supply and demand states that the value of that asset or that currency is going to go up, because people are now going to be searching for more money, but there's not going to be as much money available to get from it. When interest rates are low, there's money everywhere, which is why interest rates are low and people are fighting to try to lend out money. But when interest rates are going up, there's not going to be as much money available. And when we understand these things, it's going to put us in a much better position as Forex traders. This blows my mind how many and again, I'm in the same boat, right? I'm in the same boat. But it blows my mind how most of these traders have no understanding of what's really happening from an economical standpoint, from a fundamental standpoint, from a sentimental standpoint. Right? Trying to learn how to trade, trying to become profitable, but only knowing one form of analysis instead of getting all of the forms of analysis together. It just, for me, and again, for me, I'm talking about obviously hindsight is 2020, right? So now with what I know now, it makes so much freaking sense for us to understand all aspects of trading. Right now, with my understanding of how this really works, yeah, it makes no sense to only learn technical analysis. It really doesn't. Right? This market moves too much. There's too many factors that dictate overall price direction, and it really has nothing to do with all these chart patterns that we're trying to learn. And again, I'm not trying to downplay it to a point where I'm trying to say, or where you guys are saying is not necessary, right? You have to learn technicals, yes, because you have to know when to get in, you have to know when to get out, you have to know all of these key factors. You have to know how to read price, right? We are trading on margin, guys, which allows us, which causes us to, we can't just let trades ride forever. It's not like as if we're investing into a specific asset and we just let that asset increase and decrease whenever it wants. Right? Because if we were invested into like a stock or a crypto, if we're investing, right? First of all, investing and trading are two different things. But if we were investing into a crypto, you can just let that price fluctuate and you really don't lose until you actually decide to sell. But with trading, because of margin and because of leverage that we're given, there's only so much that we can let price actually fluctuate as. So yeah, technical analysis is key. But if you really want to get a much better understanding, and if you want to grow your confidence in this game, then you have to understand all aspects, right? And I hope I've been doing a good job with exposing you guys to this side of trading, right? I hope that I've been able to do a good job with really exposing you guys to how fundamental works and how fundamentals leads to sentiment, and then how sentiment is going to allow you to create correlation amongst currencies, and then that correlations you can start using technicals to go ahead and get involved into those markets. All right, I gotta know, guys. Right, have you guys been getting value from these sessions? Right, where pretty much at the start of every single session we really go into fundamentals. Right, have you guys been getting value from this? Let me know in the chats. Right, drop a 4 in the chat real quick. Right, I want to make sure I'm aware of what's going on. Right, drop a 4 in the chat for me. Let's see. Because this is true value. Like, this is the value that's going to take you from where you're currently at to actually being either profitable for the first time or even more profitable than you were before. Real value. Right? Remember what I told you guys, right? I want to be one of the channels, guys, that's actually not giving you guys just fluff. I want to give you guys real value that once you actually understand, is going to change everything that you do when it comes to trading. That's what I want to do. That's what my mission is. All right, I appreciate you guys for answering as well. Right? That's all it's all about. It's just really getting better with every aspect of trading. Again, my trading has went up tenfold ever since I started implementing fundamental and sentimental analysis. Because now I'm not just looking at the markets from one side. Right now I'm looking at the markets from all sides. Right? And if you guys also notice, right? The first thing that I always do, and this is the biggest thing about, especially if you do decide to watch various traders, right? Whether it's on YouTube or an academy you're a part of, I want you to start picking up exactly what those traders do from start to beginning of their sessions. Right? If you guys notice, every single session that I start, I always go straight to the economic calendar. I always go straight to try to break down what the calendar is saying, what the data that's going to be released is saying. And then I go into trying to create sentiment around the information. And then we go into the technicals later. You guys notice that I do that? Right? You guys notice that I do that? And I appreciate every single one of you guys too as well that's encouraging the family to like the video. It really does mean a lot. Right? Because when I really should be telling you guys to like the video a lot more consistently, because it does just help out getting this video out there. So I appreciate every single one of y'all, right, that do go ahead and, tell the community to go ahead and smash that like button. I love it, right? It means a lot to me. Okay? So guys, again, take these habits that you see the traders do, right? Understand how they approach these markets, and then start to look at it from that perspective and watch what it does for you. I guarantee you, your trading is going to continue to improve. Right now, enough of the talk. Let's go ahead and see what we got going on here. All right, let's really create some biases going into tonight. Now, on yesterday's stream, family, we did talk about a lot of important things, right? And one of the most important things was obviously trying to get positions that we can ride out into Friday. I know I'm currently holding a GBPUSD trade that I got in earlier today, right? I'm also riding a EURUSD position that I also got in earlier today. In the morning. I'm still holding. Right, we got the boy Kyle in the building with the $10. I appreciate you, my brother Kyle, bro. If you want anything analyzed, if you want any specific pairs, right, that you want me to look at, I got you, bro. It doesn't matter if it's on my watch list or not. Anybody that supports my channel, they get, you get free reign to ask me whatever, and I'm gonna give you the sauce, and I'm gonna do whatever you ask, right? So Kyle, I appreciate you, my brother. All right, let's see. This is why I keep coming back. You're long with the explanations in very detail. Like I said, the sauce is free, right? I'm telling you. It's like, this is information, guys, that people are literally, let me take that back. I'm not even going to say that this is the information that people are paying for, because most traders don't even talk about this stuff. Right? Let's be real, right? Like, how many different platforms or academies that you guys joined, that you guys paid for, and you guys didn't even get this value that I'm giving right now? I'm giving so much free game to you guys. Free game. And the only thing that you guys really have to do to get this free game is watch the ad before this thing starts, right? Because the video is going to show an ad right beginning. That's all you got to do, right? The ad is like 10 seconds. Once you watch the ad, then you get this free game, free value. Shout out to SBG in the building. Welcome to the Wealthy Fam. Let's go, let's go, let's go. Welcome to the family, SBG Berries. I see you. Make sure to send me a message on my Instagram after this call so I can get you added into our private chat, our private Telegram, our private community that I created for every single one of you guys that are members of this community. Guys, if you didn't know, you can hit the join button next to the subscribe button and you get access to a chat that is all about providing value, right? Again, everybody that has a badge near their name, or everybody that has their name being green, they're a part of the community. They are a member of the community. And I'm pretty sure that they can agree with you, right? I'm pretty sure that they can agree with you that the value that's being taught in that chat is next level, right? So welcome to the family. Let's see. RRP Euro Banks. Yeah, we're going to get into all that for sure, right? Let's see. I wasn't even getting this, and I am. I'm telling you. All right, there's a lot of information, guys, that even myself, I wasn't even teaching in IM, because there's certain things I was told to do and certain things I was told not to do. Right? And that's just reality. All right, so let's go ahead and see what we got here now, guys. Right? Taking a look at the market. So we did have some data that got released today. Right? Main refinancing rate for the euro actually came out. It came out literally unchanged at 0.00%. But on the actual press conference that followed, right, because inflation is going crazy over there in the UK, right, they're actually going to be raising rates in the next meeting, right? So next month, I believe they're going to be raising it 0.25%, right? So now even the euro, okay, I actually shared this in the chat today. I actually shared it on my social media as well, right? They're actually going to start raising rates for the first time in 11 years. That's crazy, right? They're going to raise rates for the first time in 11 years. Now, because of this data and because of that information, we actually did see, guys, the euro actually start off going higher, right? The euro actually ended up spiking up this morning, and we can start off by looking at the euro, right? It actually ended up spiking up right here, all because of the data, right? The actual main refinancing rate. But then look what happened. It did exactly what we expected, right? And I actually talked to you guys about this as well in the chat. All right, I literally told you guys before this happened. I'm like, and again, for everybody that's in the chat, can you guys please confirm this, right? Because I don't want nobody thinking that I'm just making this stuff up, right? I told you guys during this thing is happening, right? Everybody was asking questions, and I'm like, I get it, I see it, it's reacting to the news, but I believe this is going to be short-lived. That's exactly what I said, right? I said, I believe this is going to be short-lived. Right, we got the brother Joe in the building. What's going on, brother Joseph? I appreciate you. Sacktown in the house. Shout out to you guys out there in Sacktown. Right, so this is something, guys, right? When you understand the fundamental side of things and you also understand interest rate differentials, which is what we've talked about I've been now teaching you guys about interest rate differentials and how to really understand which currency is going to benefit based on that economy or that currency's interest rate that is being traded at. And that's exactly how we traded it, right? So for me, I was able to, I didn't get the best entry by far, right? Like I really didn't, because I just ended up missing this, right? But I ended up getting an entry somewhere around here at around the 1.07372, somewhere around these areas, right? And we were able to catch this whole move, right? While most people were probably looking at this and be like, man, the euro's flying. Let's start buying. I'm like, man, I don't know. I think that is going to be short-lived. So I was able to jump in, and not just myself. There was actually a lot of people in the chat as well. Like the chat was on fire today. Right, there was a lot of testimonials, right? There was people sharing screenshots of wins, right? And there was a bunch of you guys that actually caught the euro sells as well. Especially after I really just said, like, yo, this thing probably gonna be short-lived. Right now, why is it short-lived? That's the question. All right, that's the question, family. Why was this move to the upside short-lived? Right? Well, again, we have to really think about interest rate differentials. Let me actually bring this up real quick, right? Give me 1 second. All right, let me go to my inner circle chat real quick. Let's see what we got here. Where is it? There it is. There it is. Right, so this is what I had said in the chat. Right, I just pretty much broke down exactly how this works, right? High inflation is going to lead to a raise in interest rates to slow down inflation. Once interest rates start to go up, money starts to tighten, which is going to lead to the value of currencies to actually increase. But then I also said, keep in mind interest rate differentials, okay? I said the euro could be bullish against currencies based off that data against other currencies that are offering a lower interest rate. So I wouldn't be surprised if the euro actually does gain strength, you know, against, say, the Japanese yen, which everything's been gaining strength against the Japanese yen, because the Japanese yen is still at negative rates, right? The Japanese yen is still printing money. They're doing the opposite of what almost every other economy is doing. Every economy right now is raising rates, and they're reducing their balance sheet, while Japan is still printing, and still keeping rates very, very low. So yeah, it's going to be more attractive for investors to hold other assets that have a higher interest rate. That's what I said. Again, it's in the chat, right? And then I said, but against daddy dollar, I think these pushes to the upside will be short-lived. Now, this is also why I said that. Right, because the euro, which again is planning to raise their rates next month, right, they're going to go from 0% rates to 0.25% rates. Now, for the dollar, next month, they're also planning on raising interest rates, and they're going to go from 1% interest rates to 1.5% interest rate. Now, as an investor, guys, really put your investor hat on. If you had the ability to put money either into the euro, that's going to give you a return of 0.25%, or putting your money into USD, which is going to give you a return of 1.5%, what makes the most sense for you? Which one is going to give you the best rate of, which one's going to give you the better rate of return? The euro or the dollar? Right? Because that's really what we need to understand. Because that's what the interest rate differential speaks about. The differences in interest rates, because the higher the interest rate, the more likely people are going to want to invest there, because you're going to get a better return for your money. This is some sauce. Let's see, 3 years later, is Abel still dropping sauce. Shout out to you, DJ. You know the vibes, right? That's all I do. I'm here to provide value. Again, as I continue to learn, because 3 years ago, I wasn't talking about none of this, right? 3 years ago, I was focused on trend lines or not trend lines, but I was focused on market structure and price action. That's all I was focused on, right? Was learning market structure, trading market structure, and price action, which there's nothing wrong with that. You do have to learn that, right? But that was 3 years ago, right? But now, as I continue to learn and get better, as I continue to grow and get better, the more that I learn, the more that I'm able to teach and provide you guys. Abel Sauce Melendez, I love that, all right? Let's see, I talked about this during my New York session. I used the metaphor. It's like a game of tug of war and the interest rate acts as the power. That's true. There we go. Guys, my guy Skaggs does do New York sessions. Well, he does it for his inner circle mainly, but he does actually do some public, some free sessions for you guys. And again, he's somebody that I feel like is one of the best in the game. So if you guys are not following that Skag Academy channel, go ahead and follow that on YouTube. Very important, right? But he's right, right? Interest rates is like a game of tug of war, and the country that has the higher rates is usually the one with the most strength, right? They're the big boys. They're the ones, right? They're the ones that are going to come in and just tug the hell out of anything that's against it. So that's why when price went up earlier, I wasn't fooled by this. This didn't confuse me whatsoever, right? This only made me want to go ahead and say, man, I'm getting a crazy, crazy steal, right? I'm going to be selling this at a premium, or yeah, I'm going to be selling price at a premium, right? They're going to push this against me like this, knowing that I understand interest rates. Oh, man, let me go ahead and jump in this trade easily. Right? Because when you understand these things, your confidence is now going to go higher to actually take advantage of things like this. This is not scaring the investor or the trader that understands, for one, how to trade fundamentals and understands interest rate differentials. This is not scaring us. This is actually exciting me. I'm taking this all day long. They want to spike up like that for me? Give me that entry. And don't just give me that entry, but I'm even risking a little bit more. I'm risking another percent. I'm not just risking 2 now. I'm going to risk 3%. Let me go in here and up my lot size a little bit. Get a little undisciplined. If they want to test me like that, let me jump in there. Right? Your confidence just goes through the roof, guys, when you start to really put 2 and 2 together. It really does. So, with all that being said, what can we expect now? Right? Now that we've seen the move, right now that we've seen the big sell-off to the downside, what can we expect next for the euro? What can we expect next for a lot of these other currency pairs we're going to talk about? Well, again, I'm still daddy dollar, right? I'm still on the side of the dollar gaining strength, gaining massive strength, and gaining massive strength as well, right? I believe we're going to continue to gain strength, right? And I don't see us slowing down anytime soon until we actually get some data that shows that that inflation is starting to go down. That I'm still going to be bullish to USD overall, right? So I think even if the euro, I'm not sure if we're actually going to see the euro really spike up too crazy, right? I don't think we're going to really see it. And if it does happen tomorrow, and this is something I want you guys to be aware of, guys, right? Because there always is times where market does some crazy stuff, right? And if the market pulls back for us, that is an opportunity to start looking for shorting opportunities. So what I'm going to be looking for is I want to see if price or how price reacts back up to this level of structure right here. Right? This 1.065 level, 1.065. If price goes up to this 1.065 area, I'm going to be interested in looking for some shorts if it does. If for whatever reason price does like what it does today and the euro actually gains even more strength, then I'm definitely going to continue looking for more sells all day long. Right? If you guys want me to be transparent with you guys, I'll be transparent, right? Again, I try to be as transparent as possible. I actually took a loss, like when I woke up this morning, I actually took a loss to Euro USD. Right? Again, full transparency, right? Let me see. Where I actually did take a loss, I'll show you. You guys can see the reds, right? I took a loss on Euro USD, right? This morning. When I woke up to stop loss getting hit. But as you guys can see, yeah, you guys can see the reds, but you guys can also see all the blues that follow next, right? Because I got back in, right? Because I realized that I took a L because my stop loss was above this swing high. And this right here is not scaring me from my ultimate bias. So I was able to jump back in, and I made that loss back and some because I'm still holding. I'm still riding. I only lost 2%. Right now, we're currently up almost, I would say, 5%. Okay, because I'm aware of what's going on. Right? I'm aware of what's really happening, guys. Right? Again, I say this all the time. Awareness is so important. You got to be aware of what's really going on. Right? You have to be, right? When you're aware of these things, when you have awareness, a high level of awareness, a high level of discipline, then you will also have a high level of results. Right? That's actually one thing that I spoke about today, guys. I actually spoke on a podcast today, right? I actually did a podcast today that's probably going to get released. Probably, I'm not sure when it's going to get released, right? I believe it's going to be released next week, though. Really dope podcast as well, right? With a good friend of mine. Shout out to the Chart Addicts team, right? If you guys are not following the Chart Addicts YouTube channel, highly recommend you guys to do that. You know, they're a phenomenal squad, phenomenal team, and they actually interview a lot of the best traders that are out there, right? And give you guys a lot of insight from the trader's mind and trader's perspective, right? But on that podcast, I was actually talking about that. High level of awareness, high level of discipline is going to lead to a high level of results. And that's pretty much what I believe we're going to really see and we're going to experience. Let's see, Skagany Water Goats, I appreciate that. That's love. Right? That is love. That is love. Right? Give me 1 second, guys. That is love. Right? So, here's what I'm looking for the euro. I want to look for more continuations to the downside. If for whatever reason price still breaks up above this 1.065, that's cool. I'm still going to eventually be looking for more shorting opportunities all day long. Right? I'm selling the dollar. I'm selling the dollar. And I'm going to continue looking to sell the dollar. No ifs, ands, or buts about that. All right, so let's go take a look at gold. I know gold is definitely a fan favorite. Super volatile. Right? And it's one that a lot of people like to trade. Right? So let's actually go ahead and take a look at gold and see what we can come up with ultimately, right? So gold is a little bit trickier. Right now, typically I'm thinking about gold as also acting like a safe haven, right? Where during times of FUD, fear, uncertainty, and doubt, gold typically likes to benefit from that. And just because I understand that, I'm expecting gold to eventually want to go ahead and skyrocket. Like, that's my main intentions. That's what I would love for price to do, right? Is for price to go, for gold to absolutely go ahead and increase in value. Okay, that's very simple. That is my main bias, guys, for gold, right? For it to increase in value. But I'm not gonna say for some reason, but gold lately has not really been doing too much, right? In fact, gold lately has been so much weaker even against the US dollar. The dollar has been tremendously strong, guys, that it's even bringing gold down, right? Where there's people more interested in investing into the dollar as opposed to investing into this precious metal, right? During times of chaos, guys, precious metals usually do phenomenal, right? During a recession, gold typically does really, really well. Silver, right? Even silver, which is trading, in my opinion, at a very, very big discount, also does really, really well. Right? So, yeah, I'm still going to be leaning towards bullishness for the gold. I've been talking about bullishness for gold for a while. I'm just going to be a little bit more cautious, though. Because, like I said, right, for some reason, the dollar has just been extremely, extremely strong, and it really hasn't, you know, price has been just acting a little bit weird. Right? But I am still bullish, right? I don't want to get nobody confused. I am still bullish, right? So what are we looking at with gold right now? Well, right now for gold, guys, we're actually playing like this little level of structure right here, right? It looks like a little head and shoulder type of play right here, right? We got left shoulder, head, right shoulder. So what I would like to see for gold is if we're able to actually hold this level and we can actually come up and say break, I would say this level right here, around the 1846, if we can break 1846, then I might be interested in looking for a long around there. I have a feeling gold is just waiting for that burst of bullishness, right? Yeah, it's very possible, right? But I think if we can go ahead and really break above this 1846.5 level, even just to keep it simple, if we're able to go ahead and break above the moving average here, right, off of this level that we're at now, because again, we're at a very interesting level, right? If we're able to break above the 50-period moving average, or at least this, like I said, the 1846, 1847 level, then that might be an opportunity to go ahead and take a long position here on gold. Again, I'm bullish. It's just, you know, nothing has been able to really defeat the dollar. Right, so I'm bullish. It's just we got to be obviously mindful. The dollar's strength might just be a little bit too much right now. But I'm definitely going to be looking for an opportunity, right? If we're able to go ahead and break above 1840s or 1846, 1847, then we could look for an opportunity like this. I want to see a break, a retest back to 1846, and then from there we can go ahead and ride this thing long. Areas that we could target, right? Back up to structure right here at 1850s. Back up to structure up here at 1855s, and then even all the way back up to these highs up here at around 1859 from more of a short-term perspective, right? This is more of intraday type of setup or intraday type of targets. For long-term projections for gold, I believe we're really going to go back up to 1900s, and eventually I truly believe that we can even get back to 2000 for gold. Right? I truly believe it. Again, a lot of the fundamental side of things is leaning for gold to really go ahead and absolutely increase in value. From a fundamental standpoint, gold should eventually reach 2000, in my opinion. Right? Gold should definitely reach around 2000. Just because from a fundamental standpoint, there's probably going to be a lot more interest in gold than as opposed to more riskier assets. Remember, we're in a risk-off environment, guys. Risk-off environment tells us what? Safe havens benefit. During risk-off environments, gold is going to benefit. USD is going to benefit. Those are the things that benefits during risk-off environments. Are you guys with me? Drop some threes in the chat if you guys are with me, guys. Right? Drop some threes in the chat if you guys are with me. I want to make sure you guys are still awake, right? Drop some threes if you guys are with me. Right, and if you see me looking down, it's because I'm also looking at the stream on my phone just to make sure that there's no issues. All right, make sure we're still good to go. All right, drop those threes, guys, if you guys are with me right now. Perfect. Perfect. Right, so we're going to see, like I said, I'm going to be very cautious. I'm going to be staying on my hands for the most part. Right, but I want to really just see how price ends up playing off of this key level that we're at now. And if prices continue selling, then it's no big deal. Right, if price were to continue dropping, then it is what it is. No harm, no foul. Right, no harm, no foul. Right, because if it does continue dropping, then I'm going to be looking at this area right here, right, this demand zone, and see how we ultimately play off that demand zone instead. And still, very similar concept. Very similar concept, right, to what we're talking about here. Okay, if price continues dropping from here, then it is what it is, right? I haven't got my trigger to jump in. So if price comes to this demand zone down here at around 1842, which is a possibility, all right, similar concept. We'll see for a break of structure on smaller time frame to then go ahead and get involved, or wait for a break of the moving average, and then you can also use that moving average as a trigger as well to go ahead and get involved. Okay, so those are the ways that I'm gonna be looking at for gold, guys, going into tonight and seeing how it happens. All right, so that's pretty much what I'm looking at for gold. Now let's go take a look at pound dollar, right? Because again, I am currently still in a pound dollar position. All right, I'm still holding a pound dollar short because remember what I told you guys yesterday, family. Yesterday was really the opportunity to get yourself in some positions to try to ride out going into tomorrow to see if the dollar does continue gaining strength because inflation coming out high. Then we can really turn this intraday trade into something that turns into something massive. All right, so I'm still in a position for GU literally all the way up at these highs. I sent a screenshot as well in the inner circle chat. All right, so now it's a matter of seeing what actually happens. But for re-entries, what can we do for re-entries, right? What can we potentially look for? Because right now, I mean, gold really isn't doing much, right? It's gotten obviously very, very choppy over the last few hours, right? We're looking like price is really slowing down. Momentum looks like it's starting to slow down. So I would love to see, and this is me personally, right? But I would love to see GBPUSD come back up into this area up here, right? Again, use previous structure, previous levels of support and resistance to help you identify future levels of support and resistance and where price can play off of. So if we can see price, guys, come all the way up to this 1.25 level, that is the area that I would really like to look for more shorting opportunities here for GBPUSD. Right? That's what I'm looking for going into tonight. Right? So again, I'm still holding my position from up here, but I will re-enter another position if we're actually able to see price come back up to here, right? That's 1.25 200 level, 1.25, yeah, 1.25 200. That's going to be my sweet spot for another sell here for GBPUSD. That's really where I want to see price react from those levels, right? It could look something like this. All right, we see price come up into here. My stop loss, you can either use your stop all the way at the highs if you want to be a little bit safer, right at the top of the swing high, which is going to be around 40 pips stop loss, which again, and this is something I need you guys to really understand, guys. If you're scared about having a bigger stop loss, like if you're scared about having a 50 pip stop loss or a 100 pip stop loss, I don't ever really have 100 pip stop losses or anything like that. But if you are scared to actually place those type of stop losses, that just tells me that you are over leveraging. Right, that you tend to over leverage a lot, because stop loss really doesn't matter, because whatever it is that you're risking is your risk no matter the size of the stop loss. But what most traders tend to do, most traders tend to decide on their lot size based on how big their stop loss is, without actually using a position size calculator to figure out what it should be. Right, guys, your stop loss should not dictate, well, technically it should, right? But your stop loss in itself, guys, is not going to change how much you're actually risking. Your risk is going to be the same whether it's a 10 pip stop loss or whether it's a 100 pip stop loss. It's still the same amount of risk. The thing that's going to change is going to be your actual lot size. That's the only thing that changes. But your risk does not change. Your lot size changes depending on how big your stop loss is. But the risk stays the same. If you're risking 1%, it's going to be the same if you're risking 10 pips or 100 pips. If you're risking 2%, it's still going to be the same risk. So if you are scared to place a 100 pip stop loss, it's probably because you're over leveraging. And you need to have that awareness and then have the discipline to change it. All right, so what you can do is, again, put your stop loss all the way up at the highs if you want to be safe, right? 40 pip stop loss. I mean, the target right back down to these initial lows is already a 2-to-1, right? Which, again, that's all I really need. I look for 2-to-1 risk rewards, right? Obviously, anything better than that is just amazing, right? And I believe we're going to have bigger opportunities to really go ahead and ride this thing much lower as well, especially if the data comes out the way that we expect, right? So realistically, we could look for something like this, right? Let me show y'all, right? We're talking about risking 40 pips, but what happens if price ends up coming all the way back down to these lows, which again is very, very possible, right? See, now look at the risk to reward. Right now, look at the risk to reward, right? Now the risk to reward is 8.5 to 1. So if we're risking 40 pips to go for 360, let's turn that in terms of percentages. If we're risking 2%, but yeah, our risk to reward is 8.5 to 1, that means our target is going to be 16%. We're risking 2% to ultimately go for 16%. That's going to pass every single challenge that you can find for all my prop firm traders out there. Right? Having a setup like this, you're passing first and second phase. Having a setup like this, you're getting a massive payout if you're already on the live account. 60% on a $100,000 account, that's massive, right? That's 16,000, right? You're getting 85% of 16,000. That's big boy money. All right, it's decent money, right? So these are the things that we're looking for, right? I'm looking for these type of moves going into tomorrow. Let's see. All this sauce, where we supposed to be, sir? You know the vibes, right? Abel gives sauce and nuggets also, right? Yep. Risk same percent no matter stop loss. There we go, Martin. right? Preach it to the choir. Tell them once again, Martin, because I don't think they be listening, right? I'm talking to all you guys in the back that know that your struggle, know that your issue is over leveraging. We talking to you. Me and Martin, we're talking to you guys, right? The risk stays the same no matter the stop loss size. Please, when do you move your stop loss into profit to avoid being stopped out? That is a great question, Bernice. Right? So for me, when I move my stop loss into profit, which is a part of trade management, which is something that you have to learn, that's a part of the actual skills itself. Learning how to manage your trade, active trade management is a big thing, right? I don't move my stop loss until I actually see a reason for it. What I typically look for is I want to see levels of structure being broken in the direction that we expect price to go before I really start to play around with my stop loss. So for this example right here, just to keep it simple, right? If I get an entry up here at around 1.25, actually, let's talk about the position I'm in right now, right? So again, I have an entry already up here, okay? I already have an entry. I'm already at stop loss as well, or my stop loss, I mean, is at break even right now. But I didn't move my stop loss to break even until we actually broke below a major level of structure. Right, I moved my stop loss once we got back below this level of structure right here, this zone that I have created. That's when I moved my stop loss. Because if price does go back above that zone, see, then price is just probably going to come right back to our entry. And at that point, I'm not even going to deal with it, right? Because when price does come back to my entry after, after a move like this, more times than not, this is me personally, I start to get emotional and then I start to make bad decisions. Right, and I'm aware of those things, right? Since I have the awareness to understand that when price does that and comes back up and then it hits me out or whatever the case may be, I'd rather just go ahead and get stopped out at break even and just move on and find something else. Because every other time that this happened, I typically end up reacting a certain way that usually ends up just making me lose a little bit more than I really should have. Okay, very important sauce, guys, right? So again, for me, breaks of structure is what I want to see. So if I get this entry right here at 1.252, I'm not moving my stop loss unless we actually break this level down here at around 1.247. Right? So we're talking about I need to see 50 pips of profit for this specific example before I really start to move my stop loss to break even. Because what I don't want to do is move my stop loss prematurely, right? Way too early. And then price bounces back, stops me out, and then still goes in the direction that we expect, because then I'm definitely going to be emotional because I'm going to be pissed off. Right? I'm going to be mad. I'm going to be upset that I did that. Right? Because again, moving your stop loss prematurely or too soon, yeah, you might get breaked out at break even and you didn't lose on that trade, but you also didn't make the money or catch the pips that you could have caught. Right, so I don't like moving my stop loss way too soon, right? So I want to see major levels of structure being broken before I go ahead and do that. But guys, this is something that we can see, right? Again, I mean, don't be surprised. Price can ultimately really push up there, during London session, give us that entry, and then go ahead and move lower, right? So I'm probably going to be sending a pending order, a sell limit before I go to sleep tonight, right at this level, and then we're just going to wake up and deal with the consequences, right? Whether we win, whether we lose, it is what it is. It's a part of the game. But I'm definitely comfortable taking that risk, risking 2%, and then seeing what happens. Okay, so let's go ahead and take a look at what else we got here, guys. Let's talk about USD CAD, and then we'll talk about dollar yen, because they both were on fire. All right, like absolutely on fire. Look at this, right? This thing is on fire. Right, and again, this is something that we should have predicted, because dollar strength has been the overall talking piece of this whole thing. Now, this type of momentum, guys, also did come from a lot of Canadian news, right? From the actual housing market over there in Canada, right? There's like a lot of news around the housing market and the housing situation in Canada, right? That just really made the Canadian dollar decrease and lose a lot of value, right? So now we're talking about obviously inflationary fears over there in Canada and everywhere else, which is going to benefit the dollar. But then also they had a lot of other data as well that was really just negatively impacting the US or the Canadian dollar itself, which caused price to absolutely skyrocket. But what I want to see now, again, I'm still expecting more bullishness. You guys can see where I'm looking at. Look at the key levels. Again, don't overcomplicate, guys. I feel like too many people, and again, I know because I used to do the same exact thing. But so many people, guys, they overcomplicate how to identify key levels. Look at here. Price acted as support, broke through it, acted as resistance. That's all I need to know. Because now price is either going to come back down to this level, act as support again, and move higher. Or price can come to this level, break it with some type of force, and then reverse it and turn it back into resistance, and then we'll just continue lower. It's that simple. Again, technical analysis, guys, needs to be the easiest part of this whole thing, right? You don't want to overcomplicate this aspect of trading, right? We already are dealing with so many other factors, right, outside of technicals, right? So you don't want to really overcomplicate trading at all, right? You really don't, because when you overcomplicate things, it's going to make things harder and worse for you overall. All right, so yeah, I'm looking for the bullish play. I want to buy USD CAD. I want to buy USD CAD. So it's either we're going to play off of this level of structure right there, or price might actually want to go ahead, go a little bit lower, maybe grab some liquidity, come down to this demand zone, and then also off this demand zone, there's also a possibility. I'm just throwing this out there. There's also a possibility for price to react off of there as well. But what I'm looking for more so anything is I really want to see price come down to here and then give us a move higher. That's what I would be comfortable actually buying USD CAD from, right? Now, the question again, I'm pretty sure people are going to ask, right? I'm not sure, DK Brams, if this is for you or for USD CAD or for that Bitcoin question you asked, which I'll take a look at Bitcoin as well, right? But the next question, well, Abel, can we sell all the way down to there? Should we take a sell to ride this down? If you are experienced, then yeah, you could look for reasons to sell if it makes sense for you. Again, the key word there is if it makes sense and you know what you're doing. If you're experienced, then yeah, you can start looking for shorting opportunities if you believe it's going to correct. Do your thing. It's your account, right? It's your account at the end of the day. What I'm going to do, I'm just going to wait for price to get down there. If it gets down there, then I'll pull the trigger. But I'm not interested in trying to ride out both. And I don't recommend it. Okay. Let's see. How long would you be looking to hold that sort of trade, right? I mean, I'm going to hold it, especially something like that where I believe the dollar itself is just going to really continue to really just control the show like that. Those are the type of plays, guys, especially for like GBPUSD. If we get an entry, we can ride that thing, I mean, for as long as we possibly can, right? Continue riding it as long as structure continues to get broken. You can even realistically continue riding it all the way until the data starts to change if you have the patience and discipline to do so. All right, that's definitely very possible as well. If you're holding trades going into tomorrow's new person, do you still take partials and let the rest ride the trade? Yeah, 100%. That's what I like to do, Kyle. Right? I always like to take partials. Right? The moment I've moved my stop loss to break even, I'm taking something off of the table. I'm taking partials. Right? The moment that I move my stop loss and I put it into break even, what goes hand in hand to that is me also removing some type of money off of the table. That's always what I typically do. Yeah, 100%. Right now, how much do we actually close out? It depends on the situation. Right? For something like GBPUSD, where I expect a lot more downside, I'll probably end up closing maybe like 20, 30, 40% of my trade at that first time, at that first level of structure that we break, that causes me to move stop loss to break even. I hope that makes sense. Let's see. I want to join the group. Oh yeah, go ahead, Tierra. I promise you, you join the group is definitely going to be something that you're excited about. I guarantee it. Right, I guarantee it. All right, so let's go ahead and take a quick look at UJ. UJ is also going to be, something that just been absolutely on fire. Like this thing has just been, you guys can see this, right? Like literally non-stop. Like this thing has no intentions on slowing down. Again, I'm not going to be the person to try to predict the sell on this. Look at this, guys. This thing has just been absolutely on fire. And obviously, like we mentioned in the beginning, understanding interest rates and all that stuff is probably a big reason why the yen is just getting destroyed. Right? Again, remember what I said. Right? While most economies in the world are dealing with inflation, right? Most central banks are combating inflation by raising rates and by reducing their balance sheets, right? Quote unquote quantitative tightening is occurring. Right? I'm not sure how much, let's go back to that, right? Most of these central banks are trying to fight inflation by raising rates and reducing their balance sheets. But the Japanese yen is doing the opposite. The Japanese yen is still printing money all the time. The Japanese yen still has rates that are negative, right? They haven't raised rates yet to try to combat inflation, and that is the reason why the Japanese yen is getting destroyed across the board against pretty much majority of the currencies. It doesn't really matter what yen pair you look at. Most of them are getting destroyed, right? Most of them, right? In fact, let me actually, and again, for this, I just want to see more upside, guys, right? I want to see more upside for USDJPY. Obviously, we're going on almost 2-3 weeks straight of now just straight momentum, so we do got to keep that in mind. But I'm a big fan, guys, of just really looking for more buy opportunities off of this level right here. Right? Like, we're very close to it, right? Around 133,800, 133,780. If we can really see price come down to these areas right here, right? 133,700, that's where I will be very, very comfortable. Very comfortable with looking for some more buy opportunities for UJ. Right, I don't want to sell this. I have no intentions on want to sell this. I want to look for more opportunities to continue buying. All right, so I do believe we're probably going to see price eventually come and really run these highs. I do believe it. Right, and this can be an opportunity. This level right here of structure can be that opportunity to go ahead and get involved. Okay, we have left shoulder, head, right shoulder. Again, I don't really focus too much on patterns as much as I used to. Right, I really only bring it up because it's more easier for you guys to understand. But yeah, we have this whole little inverted head and shoulders pattern that's lining up with the 50-period moving average. We have, again, a dollar that's absolutely going to continue gaining strength as long as inflation is here. The Japanese yen has just been continuously getting destroyed because they're still behind the ball. It just looks really, really good, right? This looks like a really, really good trade idea, guys, to really take advantage of. Okay, it could be something like this. Something like this for USDJPY is definitely something that is very, very attractive. Right, and then go ahead and continue targeting more highs to the upside. Right, I like that. Okay, so that's something that you guys can keep your eyes on, guys, going into tonight. But I'm still very much bullish for USDJPY. Right, let's go ahead and take a look at pound yen. Pound yen is probably going to be very, very similar as well. Right, where I still want to see more upside, guys, for pound yen. Right, I believe we're going to see a lot more bullishness continue to come in. You know, we actually did see a pretty decent correction here, guys, for the pound yen. Not nothing too crazy, but we did see a nice little sell-off pretty much the end of day. And I think that we're probably going to eventually really rebound from these levels. Like, I would not be surprised. In fact, I would not be surprised whatsoever, guys, if we see GBPJPY by the morning time actually go higher from these levels that we're currently testing right now. Because we're actually at some very, very interesting levels right now where we can realistically see price really fly from these areas. Okay, so that's what I'm looking for pound yen. I want to see more upside, right? So I think we really have a good chance of really going higher from these areas that we're currently at. One way to really know how to get involved, wait for the break of the 50-period moving average, or you can just look at this little pattern right here that we're creating, this little wedge pattern, right? And we can just go ahead and see price really go, you know, break. Very simple, right? Very simple break and retest type of play to go ahead and see price go higher. That's very, very, very simple. Like, that's not complicated, right? Once we break out of this wedge, that could be your reason to go ahead and get involved. And as long as we stay trading above the 50 on the 5-minute, we're going to continue going higher and higher. That's a very good opportunity. That's actually something I'm going to be keeping my eyes on pretty much going into tonight, right? Because I'm definitely going to be taking advantage of that if we actually get that, which again can happen literally. I mean, it can happen anytime now. Okay? So that's pretty much where we're at for pound yen. Let's see, what broker do you use, right? So I actually use two of them, right? I have one that's in the description down below, right? That's called Henkel Trade. They're actually a sponsor to these videos. Shout out to the sponsor, Henkel Trade. They actually do sponsor me, believe it or not, which is pretty lit, right? So they're a really good broker, but I also have another one as well that sponsors me. Again, I know might be, if they find out, they might get upset. Just don't snitch on me, right? But I also have another really good one that I've just always used forever, and that one is called Nash Markets. All right, so Henkel Trade and Nash Markets, those are the brokers that I currently use today, and they're both really good. All right, now let's go ahead and take a look, and we're gonna get into Bitcoin. Don't worry, right? We're gonna get into Bitcoin, right? But let me go ahead and also take a quick look, guys, at the S&P 500, because these indices absolutely did exactly what I personally expected, right? They tanked, right? These indices absolutely tanked just like I expected. right? We've been talking about this, guys, for some time, right? We've been very, very choppy. I mean, if you guys remember, S&P 500, like I told you guys, I believe last week. Yeah, last week I told you guys from right here when price came up here, I'm like, man, we're probably going to end up start selling off from this level right here for the S&P 500. This is the exact same structure level, guys, that we created literally about 2 weeks ago or last week. And price has done just that. We reacted lower, and then we just more so started going sideways, started accumulating orders, right? And then we eventually finally just broke out now to the downside. Now, again, if we do see inflationary numbers come out higher than expected, or at least in a very similar area, if inflation is still here, guys, and if there's a lot of uncertainty in the markets because of inflation, then this is going to continue selling off. I believe we're going to continue seeing more downside for these indice markets, right? Like I want to see price eventually for the S&P come down and really test these 3,800 levels. Right, so I'm all for looking for price to pull back up, probably retest back up into this level of structure. And this is what I'm gonna be looking for going into tomorrow. All right, if by the time I wake up in the morning, we're up at these levels up here at around the 40.80, 40.70 levels, I'm selling the hell out of that. Like I'm shorting it. I'm looking to sell it because I'm expecting a lot more downside. From a fundamental standpoint, it makes sense. From a technical standpoint, now that we just broke structure, it also makes sense. Right, so I'm very, very interested, guys, in looking for some shorting opportunities somewhere at around, I would say, yeah, somewhere back up into these levels. I would say around the 40, 40.80 level is really where I would be interested. If we get to the 40.80 level, then I'm going to be selling that all day long. Let's see, do you trade in line with the bank's smart money? That's a great question. And I'm probably going to say some things that you probably might never heard of, right? And again, it's nothing bad, right? But yes, I do trade with the banks. I do trade in line with the banks. I do trade in line with smart money, but I don't trade in line with the banks or smart money in the way that you might do it, right? Yes, I understand how to trade smart money concepts from a technical standpoint. I understand all about liquidity grabs, or not liquidity. I understand about liquidity pools. I understand about imbalances, order blocks, mitigation. I understand all those concepts from a smart money, quote unquote, smart money perspective, from a technical perspective. I understand those things, right? I teach those things, or I used to teach those things heavy, right? Knowing how to really align yourself with, quote unquote, the banks, right? But in reality, when I say that I trade with smart money, I don't talk about from a technical perspective. And that's what I teach here, right? When I say I'm trading with smart money, I'm not talking about areas of liquidity. I'm not talking about order blocks. Like, yeah, you utilize those things to find entries, but that's not what I'm talking about. When I say I'm talking about with smart money, if I'm trading with smart money, I'm trading from a sentimental perspective. Like, what is the sentiment that smart money is really looking at the markets from? What is the sentiment that smart money is going to be reacting from? Now, how do we create sentiment? It's based off the fundamental data. Right? So when I think about smart money and when I trade with a smart money perspective, I'm trading from more of a fundamental and a sentimental perspective as opposed to, say, mostly everybody else. Right? Shout out to Vernon. I see you. Welcome to the family. Right? I appreciate you as a subscriber. Hopefully you subscribe because you just got some value or something like that. Right? But when I think about smart money concepts, again, I'm thinking fundamentals and sentimental analysis, not just no technical, right? Because if we're being realistic and if we're being honest here, right, smart money is not focused on no support and resistance. Smart money is not really focused on, areas of liquidity because they're creating these areas of liquidity. They're creating these areas of supply and demand. They're creating these things. They don't really need to focus on that stuff. They focus on data that's happening. They're focusing on what's happening from a fundamental standpoint. They're focused on what type of sentiment they need to use. And that's how they make decisions. So yeah, I trade with smart money. But it's probably different than what's being taught here on social media. And again, I can't say nothing because I was teaching that way as well. Right? I was teaching all that stuff, all that smart money concept, looking for, all those important things that, again, are good for entries. But you really have to understand smart money from a bigger scope of things. And that's usually from a fundamental and a sentimental place. Right? So that's what I want to see, though, guys, from S&P 500, right? I want to see price really go ahead and do something like this. All right, now let's go take a look at Bitcoin. Right, I got you DK Brams, and I got you Kyle. Matter of fact, we're gonna stop everything and go right to EURUJPY. BTC USD is gonna have to hold because my man Kyle actually said let's go to EURUJPY, and since he supported the channel, we're gonna go ahead and give him what he wants. No questions asked. So EURUJPY, again, just like all the other yen pairs, yen correlated pairs, I mean, this thing has just been on a rampage, right? This thing has been on an absolute rampage, non-stop going higher. Like, this is we just had our first bearish day in, I mean, almost a week and a half, 2 weeks. Right, and I appreciate every single one of you guys, too, that are actually welcoming our newest subscribers. That means a lot to me. Right, again, just really just dropping a welcome. It means a lot to me personally, because now you're really making this environment, this community, guys, something that people will actually want to be a part of. And if you help my community grow, then I really appreciate it. It means a lot to me. So now, what can we look at from a EURUJPY or from EURUJPY and see what we can come up with, right? Well, we are currently testing a level of structure, right? That is very interesting, guys. But again, I'm bullish, right? I'm bullish this, right? Another reason why I'm also going to be very, very bullish EURUJPY, I actually think that this is actually going to start flying very, very soon, is because now they're expecting to raise rates in the next meeting. Right now, currently, interest rates are at around 0%. Right, the Japanese yen interest rates are not much different, right? It's at negative 0.1%, right? So they're not too far off in terms of rates. But the euro, right? The ECB, the central bank for euros, the European Central Bank, right? They're actually already making plans to raise interest rates next month. So because of that, now we can start, like, think about it like this, guys, right? Remember what we always say: you want to get in ahead of the news, right? We want to trade the rumors, not the facts. So the rumor is that they're going to raise rates next month. So since we see that the rumor is that they're going to raise interest rates next month, that is going to possibly really send the euro flying against the Japanese yen, which is still at negative rates. Again, interest rate differential. So if we can get an entry, and when we get an entry here for the euro yen, you can really realistically ride this thing out for a while. In my opinion, of course, right? You could really ride this thing out. So if we can get an entry for euro yen, and we're going to play off the rumors of them actually going to raise rates, then that's going to give us an opportunity to really go ahead and ride this thing much higher. Right? So what would I be looking for now in order for us to really go ahead and find an entry in this market? Very simple. Watch this, right? Look at what I'm about to do. It's very simple, right? I'm on the 5-minute time frame. This level of structure is going to be important for me, because the moment that we're able to break above this level of structure, and why is this important? Well, let me go ahead and just highlight it for you, right? We have previous level of structure right here, right? Acted as support, right? Price broke through it, acted as resistance, boom. So now if price can break back through it to the upside, what is price going to do now, guys? Let me answer that in the chat, right? If we see price actually break back above this level right here, which is, this is around the 142.5 level. If we break back above this level, what can we expect this level of structure to do? Act as what? What can we expect that level to do? Let me know in the chats. I mean, I'm writing it down for y'all. I mean, at least I'm showing y'all. There we go, Jude. There we go, Jude. Yeah. Right? If we end up, which again, it looks like we're doing it right now. It is the Asian session, technically speaking, so the yen pairs are probably going to be more volatile during this session because it is the Asian session. But if we're able to see price break above this, give us a retest, whether it's a quick retest or more extended retest, that is our opportunity, guys, to go ahead and buy this thing up. Right now, again, remember what I said about the interest rate differential. If we do get this opportunity to get a retest here and buy it up, then guess where I'm targeting, right? Yeah, we want to go ahead and, as soon as we break this level here at 142.700, that's when we go ahead and we go break even. But then we're going to be able to go ahead and target this level of structure right here, 143, And then we can target all the way back up to here at around 144, which is almost 200 pips away. And then we're going to have to go to the higher time frame, because then we can even go ahead and expect price to break these highs. And then we're going to have to go to even higher time frame to look for previous structure, which I'm not going to do right now. Right? But then you continue going higher time frame to really look for next levels of structure. Because I believe if we can get this entry, we can really, realistically ride this thing the hell out. Ride it out all the way back up to these highs at 144 at the very least. Because even then I'm expecting for price to probably break that 144 level and continue to go even higher. So something like this is how the setup can look like. Look at this. Right? And you guys tell me if this risk to reward makes sense, right? Just right back up to the highs. Look at this risk to reward. Right? 5.5 to 1. Okay? So from a percentage perspective, because again, professionals trade in terms of percentages, amateurs trade in terms of pips. All right, let me say that one more time. Amateurs talk in terms of pips. Professionals talk in terms of percentages. So if I'm risking, my risk is going to be 2% for this setup. We're going to risk 2% of our balance. What is going to be my target? What is going to be my ultimate reward? Right, my ultimate gains, we're going to have gains of what? If we're at a 5.5 to 1 risk reward, right? You pretty much just got to double it. Right, you got to do 2 times 5.5. And that is going to give you 11% gains overall. Okay? That's how we play this. Right, so that's what I'm looking for. Kyle, I hope this looks good for you, Kyle. I hope you getting this, Kyle. Right, because you're the one that mentioned it. It's looking good. Right, it's looking good. And look at what price is doing now. Price is already pushing. This could realistically happen probably sometime soon, guys. So keep your eyes on it. Again, this aspect of trading is really not too complicated. The whole thing about trading, though, is really figuring out a setup, an opportunity that makes sense. Right, is a high probability opportunity, and then just deal with the consequences afterwards. Right, the consequences are either going to be you're going to win or you're going to lose. No matter if you win or lose, you still have to just come and just deal with the consequences at the end of the day. Yeah, but this looks good. Shoot, I'm going to keep this one on my radar too, and I don't even really trade Eurogen like that. But I'm going to keep it on my radar. Let's see. All right, looks very good. Yep, appreciate you. Can you see the imbalance of EJ being filled in? Which imbalance? Which imbalance? All right, let me know which imbalance, and then we could definitely go ahead and take a look at it. All right, but yeah, this looks good. Yeah, that looks good. I like that. All right, good looking setup. Juicy looking setup. All right, so that looks good. Now let's go ahead and take a quick look at Bitcoin. All right, let's see what BTC USD is doing, what BTC has on the table for us. And let's see what we can ultimately think about or do with when it comes to Bitcoin. Now, Bitcoin itself, guys, for me, I don't really trade the cryptos too much. I rather just invest into it, just because it is very, very volatile. But this is the one thing you guys need to understand about crypto, right? Just like how we can predict certain movements in price with certain currencies, we can also predict what's going to happen with Bitcoin also based off understanding data. Okay, now what do I mean by that, guys? Well, I've been predicting Bitcoin was going to fall, and again, this is all documented stuff, right? Like I said on Facebook, right? On Facebook, and I actually just shared it not too long ago. On Facebook, I made a post after we came up and we hit, 68,000, 69,000, right? When we came up to these levels, guys, and we created these new highs, and then we ultimately came and reversed, I literally told everybody, I'm like, yo, I will not be surprised if this was the high of this actual bull market that we've been in, because now we're at a period in time where we should have expected a correction in the overall cryptocurrency market. Now, how can we expect, or how can we predict a correction in the cryptocurrency market? Is by understanding, guys, that these cryptocurrencies follow what Bitcoin does. Right, we got Wader in the building. What's going on, Wader? Shout out to you for supporting. Shout out to you for being our newest subscriber. Welcome to the Familia family. Go ahead and drop some welcomes in the chat. Right, drop some welcomes in the chat. Right, but again, this was very easily predictable because we know how to predict the overall cycles of these cryptocurrencies. Guys, Bitcoin literally operates in a 4-year cycle, and it does the exact same thing every 4 years. And this cycle revolves around the halving that Bitcoin goes through every 4 years, or every give or take a couple months, but every 4 years Bitcoin does something that's called a halving. Okay, what the halving does, it actually cuts the reward that miners get for mining Bitcoin. It cuts the reward in half, and you can literally identify what Bitcoin is going to do based on how far we are from the next halving that's supposed to happen. The next halving, guys, isn't until 2024, right? So we got about 2 years. So what I believe, and we're talking about things in terms of more of a macro look at Bitcoin, right? But I believe sometime next year, in 2023, is when we are officially going to bottom out for cryptos, for Bitcoin at least, and then that's when we're going to be able to really see Bitcoin go ahead and surpass $100,000. Going into the year 2024. Okay, so overall, we've been able to predict this stuff. Now, from a trading perspective, what do I think can happen? Right. Well, I would expect Bitcoin guys to probably rebound from these areas. Right. I think we could see Bitcoin ultimately come back up to somewhere near around 35,000, 36,000. I think that's a possibility. Right, I think that there's a possibility for Bitcoin to finally rebound. Right, but ultimately, I'm still expecting more downside. My ultimate target for Bitcoin, guys, from a bigger perspective, is around between 15 and 20,000. I really do believe Bitcoin can reach 15 and 20,000, if not even possibly lower. Right, like I'm very interested in seeing price really come down to at least the 20,000 range. Possibly even the 15,000 range. So overall, even if we do give us a nice spike up in the markets, I'm still expecting a lot more selling off for Bitcoin to occur. All right, so that's where I'm at, guys, for Bitcoin from more of a bigger perspective, right? I would not be surprised if we spiked up to 35,000, but then I'm not expecting it to go too much higher. I'm expecting price to collapse and actually go ahead and shift all the way down to around 20,000. In fact, I actually made a bet, right? I actually made a bet with a couple people, right? Literally a couple people, right? One being my uncle. Shout out to my uncle. Right? I actually made a bet with a lot of people, right? And this bet was literally made at the beginning of this year, right? At the beginning of this year, Bitcoin was still at around 50,000, something like that, right? But I was telling everybody, or at least the people that I bet, I told them, like, yo, there's going to be, Bitcoin is going to hit 20,000 before it actually goes and reaches even 70,000, 75,000. Like, I literally made this bet at the beginning of this year, right? Where Bitcoin was very, very close to 60,000 again. Everybody was looking at me crazy, right? And they took the bet. I was very confident that Bitcoin is probably going to end up going to around 20,000 because I also understand the cycle. I'm very aware of the cycle that Bitcoin has, and I'm very aware on how to read that cycle because I've done my research on these things, right? So, I mean, it's safe to say I'm definitely going to be winning that bet, and I need all my money, and I need it all in Bitcoin as well too, right? Just for good measures, right? But yeah, like that's how confident I am because again, I like to look into data. I'm very good on. I'm very big, guys, on just really understanding what's really happening, what's causing these things to move, why they move a certain way. So I like to do my research. Let's see. That price if predicted will be mad love. Oh, yeah. Right. And if we do, guys, I'm going to be honest. For anybody that's looking to really change your life, if you really want to change your life through cryptocurrencies, make sure that by 2023, you start having a weekly buy order for Bitcoin. Every single week, you want to go ahead and buy some Bitcoin. Whether it's $100, whether it's $20 of Bitcoin, it doesn't matter. But set an auto buy for yourself every single week in the beginning of 2023. and do that for the entire year going into 2024, and depending on how much you actually have invested, guys, you can literally change your life. And that's not me just making this up. You can literally change your life if you set an auto buy in 2023 to buy Bitcoin every single week all the way into 2024. And then in 2024, you double down on how much you're buying. And then you keep buying all the way until 2025. Because then by that time, Bitcoin is going to surpass well over 100,000. Right? Bitcoin's next run, guys, we're probably going to see a $200,000, $300,000 Bitcoin, in my opinion. And that's how you really take advantage of this cryptocurrency market. Because once Bitcoin does start to go up, like, yeah, you're going to be able to get a decent return on Bitcoin. But, like, from Bitcoin going to where it's at now, 20,000 to 100,000, that's what, maybe a 4x, 5x. But what you can do is now once we actually do get to that period where Bitcoin starts going up into that bull run, that's when you start liquidating some of that Bitcoin, not all of it, but start investing into some of the altcoins. That will not just give you a 4 or 5x, but some of these altcoins that are about to buy or that are about to pop during the next bull run, that's when you can get a 10x, a 100x return on your money. Guys, next bull run in 2024, I want to be worth $500 million. Right now, that's crazy to think, because I'm not even worth $1 million just yet. I'm being honest, right? I'm not worth. I mean, yeah, I'm not gonna say I'm a millionaire just yet, right? Because I'm not yet. All right, not too far, but not yet. But during the next bull run, I'm trying to be worth $500 million because of the amount of crypto and the amount of assets that I'm gonna be accumulated over the next year, 2 years. I've been buying, right? I still have a good size. Trust me, I have a good size portfolio with my favorite coins overall, right? But during the next run, that's what's really going to set me up. That's what really is going to set me up so that I don't ever have to worry about money ever again in my life. Now, I know I'm not going to be the only one. Right, let's see. Recurrent buy is what Abel is talking about. 100%. Same thing my crypto mentor told us. I'm already on it. Yeah, that's the best way to do it. I'm telling you. All right, let's see. Hex USDC. All right, if you like Hex, yeah, go ahead. All right, I haven't looked into Hex in forever. Let's see. Waiting on gold to pump. I like that. Me too. All right, Cardano ADA Hawkinson is my guy. Okay, yeah, no, Cardano's a good one. Right, ADA is a good one. All right, that's one of the oldies, but a goodie. All right, Cardano's another one that's going to really do phenomenally. All right, let's see. Crypto is fun. It is when you understand what's going on. Right, crypto is fun when you are actually educated in the space and you understand what to do. Right, crypto is very fun. Let's see. Him new with crypto. Heard you. I hit my first big bag buying an altcoin before they took off. Okay, yeah, that's what I like to see. That's probably why they call you BTC mommy, huh? I see you, girl. I see you. Right, but ultimately, family, right, it's all about really just continue to get better, right, and continue to improve, right? I'll take a quick look at NZD CAD, David. I got you right now, right, because you did say that you were a supporter of the channel. And I pretty much already got through my hit list, right? So that's one thing that I do, guys, right? I always go through my hit list, which is all my pairs right here on the side. I go through those first, and any other suggestions that happen, they come after, I go through my hit list, right? So now that I'm done, let's take a quick look at what we got here for NZD CAD, right? So NZD CAD overall, guys, I mean, this thing has just been, this is question number one that you need to ask yourself, right? When you're first going to a pair, no matter what pair it is, the first question you ask yourself is, all right, for one, do I have any fundamental biases that can affect these markets, right? That's number one. Number two, from a technical perspective, the first thing you want to do is you want to identify what the flow of the market is. We have been clearly seeing a lot of selling pressure here, right, for NZD CAD. This thing has been dropping pretty much since, for a while, right? Literally since 2017, we have genuinely just continuing to go lower and lower and lower. All right, so what can we expect now for price? right? What can we expect now for price, right? What can we expect for price to do? Let's see, you say to buy, but this is selling. I'm not sure what you mean by that. All right, I'm not sure what you mean by that. So overall, we are at a very interesting demand zone. Right, we did get a little reaction off of that demand zone. Right, but now we're also seeing more downside. So what I think, guys, we're probably going to end up seeing more selling pressure for NZD CAD. Right, we're going to see probably more selling pressure to come in. I'm personally going to be, if I was looking to trade this, I would be looking for more opportunities to go ahead and short this market, just so that I could stay with the path of least resistance. The reason why you identify the flow of the market or the trend of the market is so that you can figure out what the path of least resistance truly is. And when you figure out what the path of least resistance is, then you're able to go ahead and do what you do. Okay? So what I think we can look for, again, using just regular structure, don't overcomplicate it, is that a sell from this 0.816 level, 817 level, a sell from there will be very, very attractive to me. Right, to then go ahead and target these lows right here and possibly go ahead and run these lows. Okay, but yeah, 0.817. Let's see, David, this is where I would be interested in really, really shorting price, right up in these levels right here. That's what I will be interested in doing personally, right up here. Right, if we're able to get an entry up here, that'll be pretty cool, and then we'll go ahead and just continue riding this down. Right, because again, I want to go with the path of least resistance. Clearly, price has been bearish, and I believe we're going to continue going bearish after a pullback. Right, we've seen a nice decrease today. We're going to pull back up and then possibly continue going lower. Right, so that's what I will be very, very much interested in for NZD CAD as well. Right, but overall, family, again, another phenomenal stream. You know, for anybody that's interested in really taking your trading up to a whole nother level, guys, I am hosting a boot camp, a 5-day virtual boot camp right on Zoom, right, June 27th through July 1st. There's been a lot of you guys that already have been signed up, a lot of you guys that already been, you know, that secured your spots, right? Shout out to you, Faleman. I appreciate you for subscribing. Welcome to the family. Right, but family, if you got some type of value today, and if you want to really take your value up to a whole nother level and really, really get better with this, make sure to sign up for my boot camp. Right, 5-day boot camp, June 27th to July 1st, in about 2-3 weeks, and it's going to be next level. I'm talking about next level. Right, because there's literally an entire blueprint that I'm going to be breaking down on every specific day. Every day is going to be something different that we're going to be going in depth on for a few hours. And we're also going to be back testing every single thing that we talk about so that you guys can gain the confidence to really take things up a notch. And I guarantee, and I don't really guarantee much, right? But I guarantee anybody that does participate in this boot camp, you will see your trading increase tenfold after the boot camp. Guaranteed. Right? Because I've been teaching now for the past 4.5 years. And all the information that I'm teaching right now is next level information that I know for a fact is going to really change the game for you. Let's see, after attending your boot camp, will we be able to start live trading 100%? You could trade live off this information I'm giving you guys here on these free sessions. Right? These free calls right here that I'm giving you guys. You could trade live off of this information. So you'll definitely be able to trade live after the boot camp, and we go 5 days straight of real value. And in fact, guys, that week that I'm hosting the boot camp, I'm probably not going to be doing these live streams. Just throwing that out there, right? The week of the boot camp, I'm probably not going to be doing these live streams because that week is going to be really tailored just to everybody that's in the boot camp, right? So we're going to be hosting the actual boot camp itself. It's going to be around 7 p.m. Eastern, 6 or 7 p.m. Eastern. Then we're going to be on that boot camp, guys, pretty much for however long we need to be. 2-3 hours, 4 hours if we need to be. Cool thing is, every single day will be recorded. So whoever participates in the bootcamp will also get the recording as well to the bootcamp. So if that's you, go to the description in this video. Make sure to fill out the form that's down there so that I have your information. And then also send an email to the email that's down there in the description and say that I am ready, Abel. How do I actually go ahead and secure my spot? And I'm gonna be honest, guys. There's already a lot of you guys that secured, right? I was planning on leaving it open all the way until, you know, the weekend of the boot camp, but I might end up closing it probably by next weekend, right? Just because there is a lot of you guys, and I want to make sure that I have enough time to really answer all the questions that every single one of you guys have. And if there's too many of you guys, and I feel like there's gonna be some of you guys are gonna be pretty much left without getting all your questions answered, and that's what I don't want. Right? I want to make sure that every single one of you guys that are a part of it get every single question that you have answered. So that's probably why I'm going to end up limiting how many people actually get involved. So if you're serious and if you're interested, make sure to go ahead and plug in and secure your spot immediately so that you can guarantee yourself on. Okay, because the next bootcamp that I do, the price is going to go up double because I know what type of value that's about to be provided, and I know exactly what it's going to do for a lot of people, right? So the value is going to go up. The price is going to double by the next boot camp. And I'm not doing these boot camps often. Maybe once every 2-3 months I'm going to be doing them. So take advantage of this first one. Take advantage of the very, very cheap price as well that it takes for it. And I promise you, you're going to see massive, massive returns for that. But family, I appreciate you guys. I love you guys. Thank you guys for rocking with me. Thank you guys for supporting as always. Without y'all, I would not be able to do this. And this is going to be the last live stream of the day or for the week. I will be dropping a banger tomorrow. Really just breaking down some more value, more sauce, right? Just regular video for YouTube. And I look forward to really go ahead and continue providing with value. But it's time for the boot camp, right? So it's going to be an afternoon boot camp, right? So I'm thinking around 6 to 7 p.m. Eastern Standard Time, right? So it's not too late for people overseas in the UK and other places. But it's also not too early for a lot of people that have to work during the day, right? So around 6 to 7 p.m. is when I'm planning on actually starting it, you know. And again, the recordings will be there as well for anybody that just can't make every single day, right? You can always catch the recording, right? So family, I appreciate you guys. I love you guys. It's your boy Abel, and I'll see you guys all I'll see you guys in the chat as we. For all my inner circle family, I'll see you guys in the chat, and we'll go ahead and continue getting better. All right, guys. Love you guys. Appreciate y'all. Have a great one.